Hey, g'day traders, Sam here to give you another crypto review, XRP Ripple. As you know of the recent news with XRP ruled as a non-security, it pushed the alt market significantly. Is it the catalyst? Seems to be the case. However, how long will it last? That is what's the puzzle. But I was meaning to do this some time back as a follow-up video to my last one, which was about 3 months ago, and I talked about the bullish scenario, and still bullish on it, and let's talk about it. So here on the monthly, we have some information from an alleyway perspective as well as levels. It does fit into a number of scenarios. If I was to look at this recent event, we had a prevailing trend line that I should have labeled, which is part of the breakout trade. Bugger. Where did that go? So I'll just label it. I think leading trend line. When does a leading trend line become significant? It's when it has a lot of evidence that it's resistance. So when you break it, it becomes significant. That's one way of looking at this chart. We can also look at this from a Wyckoff perspective, where price came from historical events. As price came back, it found resistance, pulled back at wave 3 to 4, found its base, and then did the up. So that's wave 5. So historically, that's what we've seen. So it's no surprise when price comes back down, it finds a base of support back in 220. And then we had the Bitcoin rally, and you can see XRP didn't quite reach it, but it did reach the previous month's high, or the all-time month's high, perfectly aligned, I would say. So the chart does explain a whole bunch of things. So if we were to put our monthly level here, give or take a bit, that's where the wick was. So the monthly level was the target. And if we look at it from a number of perspectives, it's probably a Fibonacci as well. So let's just label that as a monthly. And it's good to see. So we'll just stretch that out. That will be a double top or triple top. Now, what does this fit into? What Wyckoff structure? So we have a number of models, and it's fitting so far so good to this one here, top right one. Ignore the middle section. It's still because this is just a template. It doesn't necessarily mean this is what's going to happen, but you can see the cycle of this coming down and then moving up. So we got that. That's what's happening. So it's likely, in my opinion, and including this one here, you have, if we were to just put an orange, if we were to do that, give me a sec, we have that trend line as well. It appears on many of the models. You can see that. And then this one as well. So that's what we're seeing. And this one had a full test back, pretty much the same. If we look on the smaller time frame. So we had a breakout and then pullback. Now we're going to look on the weekly, but this is the model I'm looking at. You can see when we get to that neckline or the monthly, we have a bit of a shakeout. In all of them, there's a shakeout. So we're going to see volatility in this area. What area? Here. We're going to see volatility, and we've got previous month closing right there on the body of the candle. So I would suspect that is where we're going to find resistance. Let's just put that monthly there. And actually, let's just put the magnet to be accurate. $1.60 it looks like. So that's what we have. We are reaching there. In the meantime, we got this monthly resistance, and we're going to explain it from Fibonacci. So that sort of makes sense, doesn't it, with this chart? So let's get rid of these, except for, okay, we don't need that anymore, and we don't need this anymore. From a Wyckoff perspective, I did label it, and we'll look on the weekly on that one. But before we do that, just let's look at the indicator. So we had our RSI, and you can see ever so slightly the breakout was there. So from a monthly, it is a breakout, and we had this long accumulation of some sort, and we had the breakout. Pretty clear, and so it'll be interesting to see where the next resistance is, and if there is another formation. I would suspect that this is what might take place, but I'm not sure at this point. It's a monthly, and let's just put those in there on the monthly. Give me a sec. I'm on the RSI. Alright, so moving along, I'll go into the weekly now. And what we have here also is the monthly 21 moving average. So we've broken that as well. So, give me a sec. So I have a theory with this Elliott wave chart that this is the count. I could probably do this, maybe 3, 4, maybe like that, maybe higher. We are yet to see that. But I do have it between $10 to $16, wave 5. So this is wave from my Elliott wave perspective, from the macro. If I was to put this in, where is it? Okay, we're looking at that. So 1, 2, this is a 3, 4, this is reaccumulation, and then wave 5. So that's what it seems like that's taking place. Now let's go to the weekly. Weekly is a bit more clear, more the information. So here is our Wyckoff model, buying climax, automatic rally, up thrust, failed up thrust, and then pull back. And you can see from the weekly perspective, great entrant exit, breakout trade, and then we had this level of resistance. Now if we were to put our levels in there, give me a sec. Where's my levels? So this has got a bunch of stuff in there, but the levels are there. We've got the monthly levels and the weekly levels. And you can see from our RSI perspective, it just broke out of that formation on the weekly. So we had this weekly level here. Okay, so that weekly level was the main resistance. We had 1, 2, 3, 4 attempts before we break through. Point of control was roughly there. So we've got a number of interests, and this WAP acted as resistance, and we can say that that is a weekly level as well. Based on these wicks here, we found that to be resistance. Now prices here. What does that mean? Well, we had resistance here, and we had roughly supporting level here. So we could come back down a bit, but that will be a level of support, definitely, to go more. Am I saying it's going to come down that much? Probably not. And it's pulled back a fair bit, 20% or so. And so we're looking for a reaccumulation range before we break to the upside again to reattempt. Second attempt, we might get a formation of some sort on the angle. So if we were to look at this, we can look at that Fibonacci there, that level there, as a pivot point, and then we might just get a rejection. We might get a harmonic of some sort here as well, but it's very hard to say. To find an entry at this point, it's too early, and it's going to be hard to find an entry until we have more data. So be patient, but this is what's taking place. We have monthly levels. We've dropped down that monthly level. We had a resistance level there as well. which was the monthly, and we might just actually bring this down a slightly bit more to make it accurate. It's a weekly level there. Where is my weekly levels? So let's just check that back, and I can say that is a weekly level. The bottom of that candle, and that's, whoops, wrong one. That is our weekly level. So strong resistance, that's what's going to be. From a weekly chart, if we look at the RSI, we got upward momentum there for sure, so I wouldn't think this will pull back that much, and I don't think Bitcoin is going to pull back that much either. But this was our LPS or spring level, and I don't think we're going to come back down. This was all accumulation. So this bucket was an accumulation, and we broke out. That's why we break out in a strong way. It's a bit. It is a bit what's the word? Unfamiliar formation for accumulation, pretty much. But either the case, we had higher highs and higher lows, and that was the signal to break out on the weekly. Now, what do we see from moving forward? Hard to say, as I said, to find an entry here, but we're looking for another Fibonacci level, and we use fib fans for that. So if we use this fib fan and align it, you can probably say that that's aligned, and we can probably say that this is going to be a Fibonacci level that's hard to pass, or resistance. So let's go on to the daily now. I am going to remove the monthly levels. Actually, just clean that up. And we can see that fib fan, we use that as a reference, and you can see in the past that was resistance, and you can see how the fib fan actually played its role. And so now we can probably look at this as a resistance. Price might play around with that, this level, which is about 75 cents. It might break a bit, play around with that before it decides to go up or down. So I'm not sure what's going to take place, but too early. If we were to apply Fibonacci to that, and we make it this way, the golden ratio is here, and that's why we're getting support at the moment. Cannot hold it. So that's what we're going to see. We're going to see the wicks come down. Otherwise, we can put others in there. 786, where's the 786? Give us a sec. So we might come, so this range is where I think price will act. And then we get a harmonic of some sort, potentially. Can we rely on this fib fan? No, we can't. But we'll leave it there. So if the price starts to go sideways here, that's a good sign for another move to the upside. But this definitely the golden ratio is there. We came down a bit for it, as you can see, and they might actually pull back 50%. That is our top and bottom range. So if we do that, our 50% is smack bang at the 786 there. So I dare say that that's where we probably come down to, but time will tell. That might be 65 cents is probably a good entry. Below there, we've got liquidity. So if we look at this, the first week that pulled back, there's liquidity underneath it, the longs. So we might sweep, we might go up and down, but eventually we'll probably sweep below that for move ups. And this is on the daily. So that's my thinking. We might come down, sweep below it before we go up. In terms of target, macro target, let's talk about that. here we go. I'll get rid of these ones, these levels. Just makes a lot of noise. So how do we get these levels? So we can see the key levels of resistance, monthly resistance, and so on. If we put it, we don't need that, don't need that, and don't need that. Maybe we need that. Where's my target group? Okay, now with Fibonacci, we added to it. This level I've defined as 1 and 0, and you can see the golden ratio right bang as acting as resistance. So that is a methodology that I use, and therefore the next key level of resistance, if we to continue, will be this level, key level resistance. Then we have the 1.414. I looked at as a major target. Why that? Because there's liquidity above this previous high. So we can probably hit that and then come down hard. And maybe 30-40% pullback in the long run. This will be the main target. So my $6, second target as I see it. And then if it's the real bullish market, this could be our wave 3 to 4. And then wave 5 could be anywhere between here and there. 10 being a round number or close to it is psychological, and 16 or this level here, $16 or so, is Fibonacci. So let's see where the other Fibonacci level is. Give me a sec. Okay. If we look at this fib, it's a swing low to swing high and back swing low, then we get this fib 1. So we also have this level of confluence here. If you can see, due to this swing low, swing high, fib extension, we get our fib extension of 1. That could be our wave 3 to 4, or like I said, previous target. So it's going to be hard to say, but this is we need to observe. If that's our wave 3, then wave 4 should pull back hard, and then we get a macro shakeout area, and it's aligned to Wyckoff. It might not be here. This might be a bull flag, and then the macro. So this could be a base, reaccumulation, and then one more last effort to this level. The shakeout area is aligned with Wyckoff theory. Wave 3 to 4 as well on the macro, and then up there we're looking for wave 5. And these fibs come in handy. That's why we've got the 1.414, which is aligned with that. The 1 and the 1.618 is pretty much close to each other. So you can see how things line up. We can't say where it's going to be until we see more evidence with wave 3 and 4. Until we have wave 3 and 4, we are just going to be guessing. And on the smaller time frame, we have 1, 2, 3, 4, and a 5. On the biggest, we've got 3 and 4. And so if we were to apply Fibonacci to this 3 and 4, if we ignore some of the wick and just take the body, and this body, you can see the 1.618 roughly. And I'll use this body here, body of the candle. You get the 1.618 here, aligned with the 1.272, so that's our second target. Then we've got the third target and then the fourth target, give or take. So you see how it's difficult to know which one it is. There's a whole bunch of ways of looking at targets. I've described it, and let's see how we go. Let's come back to this video now in the next 3 months and see how we're tracking. I'm going to leave it at that. Please give me a like and share. Talk to you soon.